Have you ever wondered why your bank is increasing your rates? Is it because they're greedy, or is there something else at play? Today, we're going to deep dive and find out exactly what's going on. Now, starting off with the RBA. I'm sure you've heard this terminology a lot in the past. It's all over the news, but who are they and what is their role? So the Reserve Bank of Australia is Australia's central bank, and it derives its functions from the Reserve Bank Act of 1959. Its duty is to contribute to the stability of the currency, full employment, and the economic prosperity of the Australian people. And it does this by conducting monetary policy to meet the agreed medium-term inflation targets. And that's a big one, and we're going to look at why inflation is probably central to what's going on at the moment, but that's probably the big one here. It's also to maintain a strong financial system. And there are three main reasons why the Reserve Bank of Australia will increase the cash rate. And they are inflation, employment, and economic growth. With the Reserve Bank, their main target is to keep inflation within a 2 to 3% range. Employment, as you've probably seen on the news, there's no issues there. I remember hearing somewhere that for every 100 jobs that are on seek, there's 80 people that could fulfill those jobs that are choosing not to go into employment. So we can see that Australia doesn't have an employment issue. And economic growth, and we saw that recently with what's happened over the last 2 years, that the Reserve Bank will get involved to ensure economic stability through stimulus and other means like lowering the cash rate. Now, looking into inflation, and if you're the primary person that goes to the grocery store, you've probably seen this. This is a form of shrinkflation, and inflation is a primary thing that the Reserve Bank of Australia is trying to get under control. And you're probably wondering, why is inflation so high? The main reason is that supply and demand. So supply is how much of an item is available, and demand is how much is wanted. If people want more of that item and there's less to go around, then it's natural that prices will increase. And a lot of this has come as a result of the last 2 years. With the lockdowns, there's been pent-up demand and less supply because of the fact that factories have been closed. So now, how does this all affect your interest rate? Well, with the Reserve Bank, again, their primary tool is the cash rate. And that's the price. This is the cash market, and it's where banks lend and borrow from each other overnight. And the price in this market is the interest rate on these loans. And in Australia, this interest rate is called the cash rate. So as the Reserve Bank sets the target for the cash rate, it will then have a flow-on effect with how high the cost for borrowing. As we said earlier here, that banks are lending from each other overnight. It will set the parameters around that, and as a result, will have an impact on you. And if we have a quick look at what the Reserve Bank did recently, they increased the cash rate by 0.5%. And looking at what then the lenders did, we can see that the majority increased their rates by 0.5%. The banks don't have to follow what the Reserve Bank sets. And we can see here that Bank of Vic didn't pass on the full 0.5% rate increase. But more times than not, you'll find that the banks will be in line with what the Reserve Bank is doing. And we can see that there are other lenders that actually went above the 0.5% there. Another thing to note is that the Reserve Bank will meet on the first Tuesday of every month, but that doesn't include January, where there's no meeting in January. This is where they'll discuss what they're going to do, and we'll see an outcome of where the cash rate will go. There's only three options. It's either the rate is on hold, it's increased or decreased. From there, the banks, then they'll make a decision on what they're going to do with their rates, both fixed and variable. So what we can see here is quite interesting. We can see where the lenders, we can see how long it takes the lenders to make a decision from when the Reserve Bank have made their announcement. And there's no set time frame. And why lenders will hold that is because when all the banks around them increase their rates, it'll make them look much cheaper to the rest of the market. But remembering that more often that the banks will be looking to make a decision. And it's only a matter of time before they get back within the market. So, there's a standard deviation. Most of the banks will be in that cohort of lenders and won't be too far out of the market. So one thing to be mindful of, particularly when rates are rising, that if your interest rate's looking too good, one of the questions you might ask is, has the bank made a decision on whether or not they're passing on that rate hike. With this previously, we saw a 0.5% increase. And even though the Reserve Bank of last meeting increased by 0.5%, and as we saw earlier, that practically most lenders either increased it by the same amount or decrease it a little or increase it a little, what we can see here is that there are quite a number of lenders that are still yet to make a decision. And in this case, there's over 28 lenders that are yet to make an announcement. And it's one of those things you just have to be cautious of because, again, it's only a matter of time where we see them go with the herd and make that decision within line with all the other banks. And the biggest takeaway you can get from this video is that when the Reserve Bank increase their interest rates, that is very common for your bank and many other banks to follow suit. We can see here that the last increase was 0.5% by the Reserve Bank of Australia, and you can see practically all lenders have followed suit with a few exceptions. So when your rates are increasing, it is easy to get frustrated at your bank. But unfortunately, it's a little bit more complicated. It's not that your bank's trying to be greedy and take advantage of you. It's just the way the market works. And a lot of it comes back to the Reserve Bank of Australia looking to control certain measures. At the moment, the big one is inflation. So they're trying to get that decrease and back within their set targets. And if you are looking to have your interest rate reviewed, whether it's looking to refinance or just making sure you're on a good rate, here at Hunter Galloway, we can help. We're mortgage brokers and we service Australia-wide. So reach out and visit us online at huntergalloway.com.au or call us on 1300 088 065. There's no fee for our service and we help Australia-wide. So again, reach out. We'd love to help. But until next time, I'll catch you then.